Welcome to Around the Coin. In this conversation, I got to sit down with Sergey Savastyuk. He is the CEO and founder of Tickeron, an artificial and human intelligence platform delivering trading insights. He is quite the experienced founder. He has a PhD in applied mathematics. He spent some time, grew up in Russia, moved to Silicon Valley, and had worked for a number of different trading companies, used his applied mathematics degree in AI and cryptocurrency and market trends. And he got really focused on how do you spend your money in the market when you have it. And so Tickeron effectively uses AI, but more precisely algorithms to determine where to invest your money. So it's a really cool company, Tickeron. I personally don't have money in the company, but I'm a big supporter and I might do it in the future. So check it out, tickeron.com, and hope you enjoy the conversation. I really did with Sergey. He's a super, super smart guy. This episode is sponsored by Otter Labs. HireOtter.com is the best, fastest, easiest place to go if you're looking for developers to join your startup. Otter Labs focuses on staff augmentation, so they'll connect you directly with engineers that can fit in and work with your tech stack and your culture and your team at the hours you want. Otter focuses on developers down in Argentina because they're on the same time zone, they're English fluent, and they're highly educated. So check them out at HireOtter.com. And with that, I hope you enjoy the show. Here is Sergey. All right, we are live. Mr. Sergey Savastyuk, CEO of Tickeron, is joining us today. Sergey, I'm excited to talk to you. You've got a really fascinating background and running a really exciting company. Welcome on to Around the Coin.
Oh, thank you. Thank you for the invitation. I'm going to be really happy to talk to you, and then hopefully listeners are going to learn something new.
Yeah, totally. Give me a little background on what you were working on now and kind of how you came to build out Tickeron.
Should I start from the beginning?
First of all, tell me, just starting from the highest level, what is Tickeron?
What's Tickeron?
And,
okay.
Yeah, what are you guys trying to do in the world?
Actually, Tickeron is the internet registered investment advisor with the SEC. There are a lot of companies kind of giving advice and tips and the signals, but very few of them registered with the SEC. Why? Because the level of the compliance is so high that it is kind of difficult to get through that level. And then the difference is that if company is not registered with the SEC, then they can, unfortunately, can give you anything they want. It's going to be very difficult to enforce, and then whatever we're going to learn from them could be a bunch of bullshit, okay, honestly saying. But we are registered with SEC. We provide the financial advice to retail investors, and then helping them to stop buying high and selling low. That's the kind of minimum goal, because quite a lot of investors are losing money when they are on their own. So what we are doing is creating several neural networks which are going to the market for stocks, ETFs, mutual funds, crypto, and Forex. And then our neural networks generate data. And then that data really says what's going on in the market. And on top of that, we created a natural language generation technology, which actually puts it in the plain English. What neural networks think about the current markets. So we're a subscription-based model company, and some of the products are free, some of them are premium products, and that's our business.
Okay. So just so I understand it, so you have it's a combination of software and services that effectively help people make investment decisions using algorithms and other tools?
Exactly, yep. So we have this registration where we internet registered investment advisor. So that means our advice is based only on algorithms. And that's where really a big deal for us and for the SEC, where we follow that rule. and then having algorithm doing pretty much everything what a regular investment advisor is doing, even more.
And how does it work? Are you looking at trends? I mean, are you pulling the same data? Say that other, I don't know, hedge funds or other investments?
No. We go to the market of data, and there are several companies like Morningstar, Xignite, and some other platforms, particularly on the crypto. They sell the data. Maybe listeners don't know, but when they see any mobile app, and there are some numbers on pricing, on kind of volumes, it is really proprietary data, which one needs to buy. So we buy a lot of data. We buy fundamentals, we buy volumes, we buy everything. Then we feed that to the neural networks, and then they look at all kinds of stuff. Yes, trend is your friend is one approach, but there are others, like, for instance, pattern recognitions, similar to the situation when you go to the doctor, and then the doctor measures your ECG, and then looks at the chart and says, oh, you have a problem, or you don't have a problem. How do they do that? They just simply look at the shape of ECG and making conclusions, okay? So it turns out there is also charts which one can observe, and the people use it for the pattern recognition, such as like cup and handle, head and shoulders. Some people like to trade channels. So what our software does, takes that data from the market and then tries to find all kinds of patterns. Quite a lot of other companies kind of stop on that. They say, okay, here's the pattern. But we go one step beyond of that conclusion. We take this pattern, which actually describe the psychology of the situation, and then we do the backtesting. What it means, backtesting? Backtesting means that we take that pattern and see what happened in the history with this particular pattern and this particular, let's say, cryptocurrency, whether or not that pattern gave us the exact effect we're really expecting. So then we're collecting all cases which have similar patterns. They are similar kind of in the shapes, not necessarily exact numbers. And then we're making a conclusion, oh, that pattern really worked in the past. And then now it's going to be having really good chances of succeeding. It's never going to be 100% because there is not such a thing which guarantees anything in the marketplace. But what we're giving people is the confidence level where that pattern is going to work out. So what is a good example of a psychology? Imagine like a line, which is quite often called as a resistance line. So that means the price get to the particular level and then goes down. So that means it didn't break through that price. Then trying again, really touching the same number, and again retreats, right? So there was 2 attempts. And then when it makes like a small shape and then breaks through the same level 3rd time, then there is anxiety in the market. Oh, it did break this price. And then a lot of people on this particular moment jumping into this like cryptocurrency or the stock or whatever, right? So to find the exact moment when the price breaks this particular level is difficult for the human. Because these events happens on all kinds of time intervals, like 5 minutes, you're going to have one shape. On a time interval, like time frame, let's say 15 minutes, half an hour, 1 hour, 1 day, right? So you can try to find all these events, and you're going to be overwhelmed with that type of attempt. But what the software does, it constantly on the market is constantly monitoring every minute this type of events. And then when it finds, then at this particular moment, we sell the signal. Oh, okay, here is this event. If you want, you can trade it. And that's what we do at the moment. And this is only one example of a neural network. The same thing with the trends. with the same thing with the finding gaps and other approaches.
Interesting. And this would be strictly looking at the data. So this would be looking at like the pips on the
On the
the
Forex,
classic
yes, sure.
Forex screens.
Right.
Do you feel like there's enough like where's the question I want to ask you is like, where's the innovation happening here? Is it on the speed at which people can take action on the data? And that's where the competitive landscape is? Because if everyone has the same data, or if a large number of people have the same data and they're looking at the exact same moment, is it speed that allows some people to just some traders to have an advantage over others? Or is it the sophistication of the algorithms, or combining it with the qualitative knowledge of, how humans work and what the market is doing? Or I'm curious, how are people winning?
Here's the thing that what we're doing is actually been done by hedge funds and financial institutions. So they really help rich people to get advantage over those who don't have that information. Why? Because when you get money from really wealthy individuals, you can afford to create these mathematical models and then enrich those who have the money. Okay? So the main problem is with people who don't have the money. So I talked to some of the financial advisors, and they say they're pretty much forbidden to talk to those who have less than 250,000. So that means millions and millions of people, like those who are trading on let's say, Robinhood mobile app, they don't have 250,000 to trade in most cases. And then what happens? They are blind in this market. And then my analogy here is as follows. Like, for instance, if you take, let's say, basketball, baseball, then there is a league, and a high school league or a college league, and then there is a national league, right? The problem with the market is that if you want to play market, you play immediately in a national league. And that's where the problem is for those who are thinking that they are playing in the college league, okay? And then nobody helping them. So the innovation is to create such a platform which is going to be helping people who don't have a lot of money. They're going to have simple and affordable access to this type of signals and ideas. And then this type of ideas are tested on the level of the hedge funds and institutions. So that's the that's the attempt of our company, which already spent like almost 11 to 12 million to build that platform.
Wow.
And that's where the innovation is. That let's say Robinhood also targeting the people, but they do not provide advice. That's the problem with Robinhood. Okay, a lot of people criticizing Robinhood. Oh, okay, you kind of playing with the people who are naive and they are losing money. And we're saying, okay, Robinhood, do your job, being a broker. We are not broker. We're giving advice, and we created a platform which is compliant with SEC, comparing, let's say, with Reddit, right? There's a lot of kind of social type of activity going on, but that activity is not compliant. Why? Because some people can use and misuse and mislead others, make money with a small group, kind of start leading a group of a pump and dump schemes, and then they can make money, but all others are going to lose again. Okay, so that means their environment is not compliant. Our environment is compliant, and that from that perspective, our users should not expect us to be enriching ourselves based on their activities.
I followed you up until the last. I was
Go
just
ahead.
going to say, so I understood it all, or I totally agree with the perspective of Robinhood, where they just allow you to make trades on a very simple mobile app,
Uh-huh.
and that works. They're successful in what they're
Right.
doing, but it does feel like the next level here to this game is the sophistication, using the algorithms, combining with what you feel is a good decision from a human's perspective, knowing all the
Right.
intangibles that can't be put into data, along with the data aspect of it. So I think, just like they say in chess, that the best chess player is a combination of a human and a algorithm. I think it's probably true for investing, right? To have the best investment strategy combines the human's understanding of what's going on with the data and the algorithm to suggest certain investment decisions. Um, what,
Yes. Go ahead.
I want to ask you, where are you guys today in terms of, you said you spent 12 million. How much have you guys raised, and how's the team size, and any other, can you
Yeah, we
mention
have about
revenue or trades?
40 people. We do have revenues. We're going to be raising actually more money. We have almost 60,000 subscribers. So people like our platform. We also just released a mobile app so far on Android. We're going to be releasing on iOS, the first mobile app. And we're going to have several mobile apps because what we realized that having a lot of analytics on the website is actually kind of difficult for some people who expect some level of simplicity. And it turns out that the best presentation of simplicity is a mobile app. So we started slicing and dicing our website and releasing some pieces of our website into the mobile app, and making that so simple to use that it is a kind of like a really piece of cake to understand what is the technical analysis, what is the fundamental analysis, and then how we're arriving to the conclusions we're making. And then having natural language generation technology inside, we actually explaining how we do that. And that's also part of innovation.
Yeah, I love it. I love it. And where are you guys based? Are you a remote company, or are you headquartered somewhere?
Yeah, we started in Silicon Valley. And then before the COVID, obviously, like several years ago. And then what happened with COVID, everything got disintegrated. But in fact, that we have quite a lot of people as programmers, mathematicians in Eastern Europe who actually didn't suffer much, who actually gained more traction during the COVID time when there was a lot of excitement on the market. And we were prepared for working remotely. Now we do not have a typical office. The work continues to be in different apartments, and people actually happy with that type of approach. So we really were ready for the COVID times.
That's awesome. That's awesome. And I noticed a slight accent. You mentioned in the pre-show, did you grow up in Russia, or move over here
No,
at some
no.
point through your education?
I did grow up in Russia, and then I went to university in Moscow, and then I got my PhD in applied mathematics. And actually, looking back, my first book I read, almost being a freshman, was about artificial intelligence. And what is interesting that if I look what we studied was pretty much everything people studying in artificial intelligence right now. From mathematical perspective, really nothing changed. What changed is the price of the computing power. At that time, when I studied and had my PhD, it was just the beginning of that level of computation, and it was still expensive. But the methods were the same. So what happened with the price of computers and the servers going down, the price of the computing power went down. So that means we can now afford to run so much and then retest and train the neural network which is just unbelievable. And that computing power becoming like commodity. And then we're really excited to use, and I excited actually to use all my knowledge in this field.
Wow, interesting. And so when you got your PhD, you got it in applied mathematics, I believe, and you went
Yes.
to Santa Clara University and became a professor thereafter. What were you thinking at the time was going to be your focus? How did you anticipate applying your
Okay.
degree?
Yeah. So I can tell you, back in the Soviet Union and Russia, being a professor is a really big deal. So the professors were paid in the Soviet times actually much more than the regular workers. So that was my career path when I back in '90s finished my PhD. And then there was a collapse of the Soviet Union, and then there was real disintegration and the problems. And when I look at the situation there with my kind of analytical approach, I said, man, no, the high tech in Russia is not going to be on the priority list anytime soon. So what I did, I sent about 200 resumes to United States and Europe. Actually got a couple of offers to be a visiting professor at Santa Clara University and also at Tampa University. Then I chose Santa Clara and arrived to this country. And then also had the best plan I had was to be a professor. And that's how I started. So it was quite a steep learning curve. Like in one of the year when I just started, I had to prepare like about 10 different courses and then kind of reprogram myself from Russian into English. And then really retaught myself in this field. And then kind of kept moving towards my goal to be a professor. But then I realized I was in the Silicon Valley. And then I realized that the professors were not paid as much as regular workers with the same level of education based on the salary comparison in the Valley. Then I realized there are a lot of opportunities in the Valley. And what I did while I was kind of getting accustomed to what is going on in the United States in the Silicon Valley, I went to the business school, but it was a kind of a tricky one. I was coming and auditing some classes, which is very unusual because I was teaching and I was coming to the professor and saying, okay, I'm teaching at engineering school. Can I just audit? And I was sitting in some of the classes. I kind of covered maybe almost 3/4 of the MBA program simply by sitting and enjoying my time of learning everything that relates to marketing, business, and accounting, and everything related to that. That was the best time of my life. And I consider Santa Clara University my kind of second alma mater. And I'm very thankful that I had that chance to study without homework, without exams, without tests, without anything.
Yeah, you get the best of both worlds.
Really cool. So I was teaching and at the same time studying, and then realizing that I have to move on. And then there was an opportunity. It happened to be in a field where I was not a big expert, but I was already expert in kind of managing teams. And I ended up raising money in the 90s in the semiconductor industry, where I had to apply my knowledge of applied mathematics and actually in the technology, in the creation of the semiconductor equipment tools. There was a software part, there was a physics, it was a really complicated system we were building, we were creating IP. And then I had quite a lot of success in the semiconductor industry. You can find my name in Wikipedia, where some of the terminology I invented at that time, early 2000s, and quite a lot of people started using that terminology and approaches which was recorded that I was the one who coined some of the terms. Once I counted that out of 100 presentations on very kind of prominent conferences, about 30% used my terminology and titles of this presentation. Yeah, so it was quite fun. But after kind of a few exits from different projects, I still was interested in something else, which I was doing on the side, kind of being a retail investor and trader. I was creating some of the algorithms and testing them on my own money. And then at some moment when I had some exits, I started Tikiro. That's how I kind of ended up here.
That's interesting. So it's basically through your other ventures in building out semiconductor startups, I imagine that one of the challenges you faced was how do you invest your money? I think this happens to people in startups where they work super hard, then all of a sudden they have a bunch of money, and money is, you have to do something with it, and you can't just put it in a checking account or it'll just lose money to inflation, and it's just not a good rate of return. So you have to put it in the stock market. And that general advice for people I've heard is put it in the market, put it in the S&P or the Dow, and that'll perform better than picking and choosing stocks like on Robinhood. But I also feel that there's an advantage when you have a certain amount of money, like a couple million plus, that you want to diversify outside the stock market and put it into different areas. And thinking about how to manage this money becomes kind of a full-time job. There's actually another guy we had on the show, Greg Coe, who runs a company called Algo Lab, and he had a very similar situation. He sold a startup when he was in his 30s, and then he had all this money, and he's like, "Oh man, I don't know what to do with it." And so he built out his company. Is different than how Tickeron is structured, but in essence, they have a similar challenge, which is how do you use algorithms to help people make investment decisions, and they're focused on futures and other things. But it is, I imagine that was the situation you're in. How has the knowledge of creating semiconductors and math? I mean, when starting Tickeron, were you the first person coding and building this out? Like, how did you get started on this?
Yeah, so I can give you example. One of the anecdotal story from Amazon, Bezos, he said that not once, he was saying the following, that he was quite often sitting and talking to his VPs, and he was discovering on the background how and what he can do to make a program which is going to do what this VP is doing. So that was kind of fascinating in the sense that he constantly was trying to eliminate those positions which can be put into the software. And that's maybe the reason his enterprise is so efficient. So the similar thing was happening with me. So when I started thinking about investing, I didn't have a lot of time. And definitely I had to rely on somebody or something which is going to help me. And obviously, having that background in mathematics, it's very natural for mathematicians to really look at what's going on in the market and then come up with some kind of algorithms. I started from very basic indicators, then realized that none of them working at all times. And what was happening, you're trying to use technical analysis, and then you all of a sudden see it's working. And boom, it stopped working. That was a kind of a thing which was fascinating for me. Why in the world it was working before and stopped working later? And then I realized that for different market conditions, this analysis, like technical analysis, fundamental analysis, works differently. And then I came to the conclusion that those techniques must be retaught and then changed, pretty much adapting to the market conditions. And that's a definition of a neural network. which is pretty much, imagine how these driverless cars are moving. So they're looking at all kinds of conditions and making a proper decisions where to turn, right? The same thing with the market. If you have enough of a knowledge of a market, of different market conditions, then your algorithms must be kind of adapting to the situation which is right now. Let's say now it's a low volatility market. Sometimes it's a high volatility market. Sometimes the price of oil goes up, or sometimes price of oil goes down. And that's a different market conditions. And then interest rate goes up, interest rate goes down, and it's again different market conditions. And then what happens with a lot of people, they discover that it works, meaning their technique works. All of a sudden, it stops working. And that was, for me, the very interesting discovery when I said, okay, I have to build the neural networks which are going to be trained and adjusting to market conditions. And that's where the innovation is.
That's super interesting. Do you, I want to ask you about AI for a second. It's not every day I talk to a PhD mathematician who's built an AI company. Do you share the sentiment that AI is a security concern for human beings? That you must have heard this idea that Elon Musk often talks about, that we should have a council to review the development of AI and be cautious of its development because it could effectively get out of hand. How do you feel about that claim and where we are generally?
My opinion about Elon Musk, he's the genius marketeer, because when you like in any news cycle and any press, they have a statement: any press is good press. Okay, so he manages this and his statements to the degree where he gets so much publicity and he gets so much attention that the price of his enterprises go up simply because he is very efficient marketeer. So I definitely do not share his view that there is any danger, but it is so interesting thought that the people keep asking about that, keep interested in this topic, that he gets amount of interest to his name so much that it's worth of maybe billions in advertising. Okay.
Well,
but I definitely don't share any concerns whatsoever. I'm not saying he's lying. I'm not. But he might be looking to, I don't know, 20, 30, 40, 50-year horizon, which is not reachable at this moment. Then there should be quantum computing involved. So in the nearest future, let's say 10 to 20 years, I don't see anything which could be remotely close to what he's saying. From that perspective, I don't share his concern whatsoever.
Your thought is that we're just too early to be spending significant resources. Like I knowing the very little I do know, it feels intuitively more like you're right, that we should not be trying to slow the development down at this point, that we really aren't as impressive as we think we are in terms of what AI is. I think AI is this black box to so many people. We have, speaking for myself, I have no idea really what's going on underneath the hood. And that, in a way, is kind of scary when you paint this picture of, like, imagine this AI algorithm that just runs on, your computer, and it can take over if it decides to. It has intelligence beyond what any person does. It can, it's effectively a supercomputer with its own agenda when it learns, that it wants to preserve itself above all else, which I guess it makes sense. But the question is timing, right? It's not today.
Yeah. Maybe it makes sense, but not anytime soon. Actually, the books which I read being in college, the good example, what is AI, what is not AI, was like that. So imagine you kind of give a definition of a tree, right? You can say, okay, there is a kind of core goes up and some branches going kind of outside of this core going up, right? when you're trying to give definitions to something, then all of a sudden the post for the lighting in the streets all of a sudden can get to that level of definition, right? So that was a problem with the approaches where people try to define something in a descriptive manner. Then people realize the following: what if they're going to show to a system, let's say, 10,000 trees, and then keep showing, and then all kinds of trees. And the idea was that the system, kind of looking at 10,000 trees, can all of a sudden get the distinction between the tree and the lighting post on the street, right? So pretty much it is an optimization problem, or like driverless cars, the similar way. You keep showing the cases which are possible on every turn, and then the system can adjust its parameters accordingly. And then ultimately, the problem at this particular moment of AI, it kind of gets to the level of the mass acceptance is based on a very basic math: linear algebra, stochastics, calculus. So knowing the subject, you will see that it is not that complicated. It's not threatening whatsoever. Although some of the deeper learning techniques quite often impossible to explain why machine chose those parameters. But that's the only level we are in, and there is no threat whatsoever. I just don't see that.
Yeah, it is amazing. I mean, I think of it kind of like that's how the human brain works. You know, you're shown enough trees where you just understand what something is that's a tree. You understand the essence of a tree, but you really can't pin it down. You can't say it's this tall or this wide or it has this many branches, because it like comes in so many different formats. It's like an intuitive understanding, which is pretty interesting.
And the same thing in what we do at Tickeron. So imagine you have all kinds of shapes. They could be different depths, different length, different type of kind of intensity. Then you teach the neural network to recognize these shapes. So for instance, it's been already a fact that if you teach a neural network to look at the X-rays, then the X-rays being viewed by the machines give better probability of not missing cancer or some other problems, much better than doctors these days. Okay. Why? Because the human eye obviously can be trained, but the machines can outperform. Machines can outperform now in people in chess. They can do really good job in the pattern recognition. And that's our field, actually. I can confirm that there is a lot of progress being made on the pattern recognition. Chess is a pattern recognition problem, like X-ray pictures, all kinds of ECG type of pictures. They are better recognized by machines than people.
I find that fascinating. I want to ask you about crypto for a moment. So you started Tickeron in 2014. I imagine you didn't start it knowing that crypto would be as big as it is today, given that Bitcoin, I think, was invented right around that time frame. Today, crypto seems to change a few things, I imagine, for you guys, in that you have a lot more accessible data. You know, the data on blockchains is inherently public. Some of it's not, but a lot of it is. You have different coins and currencies that are interchangeable. How do you think about crypto from a AI algo investment perspective? Do you think it's going to be? I'm curious just to hear your initial thoughts on that.
So what happened that approximately in 2017, when we released our first products on the neural networks, one product was called Pattern Search Engine, another product was called Trend Prediction Engine, there was real-time patterns. We released them, and then started working on the marketing side and promoting them. And it was year 17. And all of a sudden, we were flooded with requests of applying this technology to crypto. So that means the best feedback we've got from customers was, why you guys not in crypto? So we had to really make a significant effort in the second half of 2017 to bring the data from the crypto exchanges, train the neural network to the new markets, and then release similar products. And then what happened, as soon as we released them, we had actually tremendous amount of interest. And then all of a sudden, at the beginning of 2018, Facebook and Google and other outlets where we advertised stopped allowing us to advertise them. It was like,
yeah, I remember that. Yep.
And then crypto went down. Our revenues on crypto went down. And that was really hard drop on the crypto type of interest, right? It was like kind of a real life experience of introducing the products for crypto. And then what happened? Actually, we built such a universal platform that we can take data from let's say, exchanges in Asia, and that's going to be our plan of expansion, or like in Europe. So we're going to be buying more data and then simply plugging into the black box of our neural networks, and they're going to teach themselves. Why? Because that's exactly what we did. We first started with stocks. All of a sudden, we had to get to the crypto, and then people started asking us about forex. We included forex, and we stopped for a while because we had to polish our products. But with crypto, we see amount of interest equal to the price of the Bitcoin. So the higher the price, the more interest we see from a subscription perspective. But now, due to our next developments, I can tell you what we're working on, and that's where kind of the future of finances, reading some of the articles and the data. These days, 60 to 70% people believe that in the future, robots are going to replace financial professionals. And that's where the future actually moving to. And then what we're doing is the next product is as follows. Imagine you have an account, let's say in Binance or like Coinbase or Kraken. You're going to have this account. So that means this company kind of responsible for your money. So from compliance perspective, that means they have a custody of the money. Then they look at our company and say, oh, okay, they have a product which is called like autopilots. What it means we're going to connect our robots to your account, and then our robots are going to trade on your account. And it's kind of almost not selling the signals where the people are going to be trading manually. It's going to be like Tesla in the financial world, where you're giving away the control to the robots. Similar to like people giving away control of your Tesla. So when you drive and then you release your kind of hands from your wheel, then boom, all of a sudden the machine drives, right? So that's actually what we wanted to achieve.
It seems a little to me like driving. I understand the analogy. Driving to me seems like we have an objective. I want to get my car from point A to point B, and now it's a computational problem of understanding how to turn the wheel and apply the throttle and brake to get there. Mm-hmm. Investing to me feels different, where investing is you have money saved up and you deploy your money somewhere. Maybe you buy a certain asset. It could be a currency. It could be a physical asset, anything it is. And the point of the objective is that you're deploying your money in an asset, effectively betting that the value is going to go up in the future. And the value only goes up when other people perceive the value to be higher than it was today. So, so it's almost like it's a competition to guess who, what is going to be worth more tomorrow than it is today. And if everyone is using the same algorithm, then no one has any return, right? Because everyone's making the same financial decisions and we're all placing the same bets. It's like, if everyone bets on a horse race and everyone bets on the same horse, well, there's no circulation of money. No one can win or lose because there has to be losers in order for there to be winners in a zero-sum game. Do you share that sentiment? I mean, do you feel like the reality is there's going to be many different algorithms all competing with each other and people choose the right algorithm?
Let me give you another analogy. You will see that the life is actually more complicated than one algorithm. When I first went to one of the investing courses, and the guy was really smart. He said that the investing, it is something which is different than what people think of. Why? Because take an analogy in a dress you wear, right? So there are tall people, there are short people, there are fat people, there are skinny people, right? So it turns out there is never going to be one dress for all, right? Why? Because people different. When you look at the people, then from the investment perspective, then the young people, they might have less, actually higher tolerance to the volatility, and they can wait 20 years. If you take retired people, they have less tolerance to volatility. They want to preserve, right? So when you take even age as a parameter, you will see that the investment and trading decision are going to be different. Then you will say, okay, you need money for calls. You have to withdraw the money. So when you start thinking that it is so personalized, that it is unbelievably different, like a fingerprint, every time people making these decisions, and they are not targeting necessarily the highest profits. They're targeting their own goals. I need to save money for the boat. I need to save money for the car. I need to save money for the house, right? So then you kind of start tailoring that towards a particular goal, like a fingerprint. So then you're going to realize that, oh my God, then for one person, you have one algorithm of investing. For another person, this algorithm is going to be completely different than a different dress. So then you realize that there is no one algorithm which is focusing only on profit, because the goals and objectives are different. And that way, these goals and objectives are going to completely change your view what to buy or sell. That's one thing. Another thing, I can give you an example. Like we've been trading real money on a real Binance account with our robots. And I can tell you when market dropped 50%, we were actually up 25. Why? Because there are techniques to make money when the market goes down. And then if you know these techniques, then you can make money even on the markets which are going down. But you have to be enough sophisticated, which is very difficult for ordinary people to understand. But the robots are going to replace this thinking, and then they're going to take care of people who don't know that. So that's our goal, is to really help people with the different views in the world to make money to their goals. And actually, it is interesting. Let's take like examples like Yahoo Finance publishing articles, or let's say Investors Business Daily is also publishing articles. They cannot give personalized advice because they are not SEC registered. So from a compliance standpoint, you can gather personalized information only if you register. So the difference between us and other companies, we're taking some of the personalized information and then adjusting our advice towards the person, not towards the one goal to make money. Because of all this stuff I just said before, different people have different goals.
Yeah, that's a good analogy. I'm sold. I think you're right on this. I'm curious, where's the distribution of your business now between the stock market and crypto? Are 90% of people using Tickeron for crypto, or the other way around?
I would say crypto is about 30%. The main difficulties we're facing is advertising and getting to the viral effects on the crypto and getting actually more into the information distribution for crypto. And we want to get more crypto because the problem is that the crypto is poorly managed by SEC. They do not have enough of regulations, which are always good. The reason why the stock market is so stable and going up in the United States comparing to other countries, because investors from overseas trust to the regulators in the United States. Unfortunately, the same regulators do not do a good job with crypto in the United States. So that means the activities like Binance is doing better outside of the United States. eToro is doing better outside of the United States. And then people like you see Ripple being sued, right? So all of these things kind of go against the current flow of acceptance of cryptocurrencies. And I wish our regulators would do a better job on the crypto world in the United States.
Yeah. Better to have rules than to just have it be the Wild Wild West. Last question for you, and then we'll wrap up.
Yes.
Have you heard of Nassim Taleb? Are you
I think something. Maybe. I've seen that name.
He wrote. He's pretty prolific, pretty active on Twitter. He's I think applied mathematician and hedge fund quant out of New York, and he wrote a book called The Black Swan that I think was his most famous.
Yes, exactly. Yeah, I read that book. Yes.
Mm-hmm. Oh, okay. Yeah. And he similar to you, he's very technical and very knowledgeable, and has very contrarian perspectives. And obviously, The Black Swan is quite a contrarian perspective. Like bet against the market. Mm-hmm. Over and over and over again, take small losses, and then one day, just your example earlier reminded me when the market went down 50%, you guys are up 25. It's like that. That's a very Nassim Taleb type of example where you're like just dead. You're just laser focused on the numbers. You're not letting the emotions take over, which is where most people make mistakes. They buy when the prices are super high because they're excited, and they sell when the prices crash. And it's like, if you're more restrained and more disciplined, you could do so much better. Not speaking from experience myself personally, but
I can comment on that. Actually, kind of black swan type of approach for us from our philosophy, it's just an algorithm. It's one approach. As I said, that we've been testing 800 different robots right now to cover pretty much all market conditions. And then some people can wait, some people really made a lot of money on the crash of real estate, but that was only one algorithm. You cannot wait for another crash in real estate for another 50 years to make money. You have to deal with the market conditions now. So from that perspective, yes, it's a good thing to have one of the algorithms which is betting on down markets, but ultimately it is not happening every day, this type of crashes. And then you cannot sit and wait until your algorithm is going to work again. So we believe that the higher the diversity of the algorithm for different market conditions is the solution.
Yeah. Yeah. No, I love what you guys are doing. Sergey, is there anything that you guys are looking for? Are you trying to raise money or hire people
Yes, we're
or?
raising money. We're hiring people for our community, similar like eToro. Yes,
Yep.
we're really open to all kinds of contacts. You can find us on Facebook. We actually published 1.2 million tweets on Twitter. We're giving some
Jeez,
of
really?
the, yes, more than Trump, right?
God.
So we're giving some of the ideas, which are simplistic ones, for free and publishing them on Twitter. There is another company, Stock Tweets. We publish 660,000 ideas there. And that's a kind of way of bringing people who are interested in, in our platform through these channels. And so
Wow.
we're
Yeah, you weren't kidding.
expanding
I just
our
checked.
outreach. Yes.
1.2 million tweets. That is,
Yes.
these are obviously not human generated tweets.
No.
They're
That's the point. That's actually one of the proofs that the computers work better. So computers go find ideas and publish them. And that's what I did.
Awesome. I love it. Well, congrats on all the progress, Sergey. And
Thank you, Mike.
hope to have you back someday.
Sure. I was a really good talk. Thank you.
Yeah, I enjoyed it. Hope you have a good one, man.
Yeah,
bye.
Thank you for listening to Around the Coin. If you enjoyed the show today, consider giving us a quick review wherever you listen to podcasts. Tweet about it or text it to a friend. We really appreciate all the support in growing that we can. If you have any guests you'd like us to bring on or feedback for us, don't hesitate to reach out. We would love to hear from you.